Don't you wish you can read just one book and instantly understand how to invest in the stock market, how to analyze financials, how to be a better investor? I know just the book, and today I will tell you all about it, and I'm gonna share my favorite quotes from it. So if you skip this book, at least you know the most interesting things from it. First of all, hi, my name is Bojana. I'm based in Chicago. I have been investing for the past 3 years. I have already invested over $52,000 in 3 accounts, and I invest in stocks, ETFs, commodities, bonds, and I explain how to invest in those and how they all work. So if you're into that, please hit the subscribe button, hit the notification, comment if you have any questions. And by the way, my question for you today, what is your favorite money book, finance, investing that you ever read? Just one book, if you could recommend to a friend, what would that book be? Without further ado, One Up on Wall Street by Peter Lynch is probably the only book you need to read to know how to analyze stocks before investing in them. Now, this is just my opinion. Maybe someone will disagree, but honestly, a lot of the money books that I've read before this one, they would give very generic investing advice, like buy index funds. Okay, but what if I want to invest in individual stocks? How do I analyze those stocks before I buy them? How do I know when to buy a stock, when to sell a stock, when to wait and hold a stock? This book answers it all. Now, who the hell is this guy? Who is Peter Lynch? Why he's so good? Peter Lynch was managing Fidelity, and if you know what Fidelity is, good. If you don't, it's one of the largest brokers. I have an account with Fidelity. They also manage funds, like they actually manage investments. So he was the head of the Fidelity's Magellan Fund from 1977 to 1990. And throughout the time, the fund has achieved average annual return of 29%, which is significantly higher than S&P 500 return. This dude knows how to invest in different companies, okay? And I would put him, Warren Buffett, Charlie Munger, Peter Lynch. That is the 3 saints of investing, okay? You need to know about all of them. You need to read their books. You need to watch their interviews if you want to become a good investor. Now, again, I don't want to spoil you the book. I think you just need to read it and buy it. By the way, this book, I think it was initially written at the end of 80s, and then it was republished. They were republished from the late 90s. And you might be like, well, this is a really old book. Is this really still relevant? You bet it is. Finance hasn't changed. What does the business have to do to be successful? It has to generate revenue, profit. It doesn't have to have a lot of debt, so it stays afloat. When there is a crisis, it can pay off to debt collectors and whatnot. So, there is nothing new that has been invented. Balance sheet, income statement, cash flow, and all that, it's pretty much has been the same for the past, I don't know how long, 100 years, 200 years. It's the only thing is that, in this book, he would give you like the stock price growth graph, and you can the only thing that he tells you, like, where can you order report on financials, like by mail or what website you have to go to. These days, you can just go to ChatGPT. So if anything, this guy, Peter Lynch, he just helps you to know what to look for, because there are multiple ways to find it these days, but a lot of people lack knowing what exactly do they need to find. And this book exactly answers that. So I want to share 5 of my favorite quotes from the book and just kind of share why I really resonate with those quotes and why you as an investor, really also pay attention. One of my favorite quotes, and I'm going to read it. Investing in stocks is an art, not a science. And people who have been trained to rigidly quantify everything have a big disadvantage. All the math you need in the stock market, you get in the 4th grade. I think this is brilliant. You really need just basic math to understand most financial metrics that do matter, like current ratio, assets divided by liabilities. Can you divide? Then you will know how to identify current ratio. In fact, you could ask ChatGPT, but if you wanna, confirm and verify that you have the right number, you can also just go to Google Finance, get total assets number, total liabilities, divide them, we'll get your current ratio. Also, net profit margin. It tells what's the percentage of profit in the overall revenue. Very important to know how profitable the company is. Really, after, revenue is just the total amount of money the company makes. Profit is what is really important. And that net profit margin will tell you what is the percentage, or what is the profit part of that revenue, right? How do you calculate it? Again, you divide profit by the total revenue. And so if you can divide, subtract, multiply, add up numbers, you will be good to go, okay? And I think this is the most common myth and misconception that a lot of people think, oh, I need to be like this big mathematician. No, you don't. Quote number 2, if a stock is down, but the fundamentals are positive, it's best to hold on, and even better, to buy more. I love this quote as well. Can't agree more. That's actually why I'm holding still to Novo Nordisk and Eli Lilly. Like, I'm losing money on them. I don't have that much of those stocks though, so it's not like I'm losing hundreds of thousands of dollars. I've just analyzed them with my free stock analysis tool. By the way, if you want to access it, I built it with Claude AI. Oh, there we go. My chair starts to break. Maybe I need to invest in a better chair. I told Claude, here are all the metrics I want you to analyze the stock by, and here are the benchmarks. In the end, it gives you the verdict. So both Novo Nordisk and Eli Lilly, I kind of wait and hold and see. Why? Because fundamentals are fine. Two companies have great growth potential, and the revenue is up significantly, profit is up. But currently they're prone to regulatory changes. Quite a turbulent time for both of those. But yeah, as Peter Lynch says, if the fundamentals are positive, just hold on to a stock, or even buy more if you wanna take a risk. Next quote. Is General Electric a good investment? It's not the first thing I would inquire about. Before you buy, ask yourself, first, do I own a house? Second, do I need the money? And third, do I have the personal qualities to succeed in stocks? This is great. I love this one. Lynch is basically saying investing should not be your priority if you are broke. If you're living paycheck to paycheck and you cannot cover your rent, what if you get laid off, unfortunately, in the next 3 months? You will need the money to sustain yourself through the period of unemployment of the next, 3, 6, 9 months. Do you have that money? Will you need it at that point? Yes, so do not invest it. And third, do you have the personal qualities to succeed in stocks? Here, it's basically about risk tolerance, and I'm gonna leave the free risk tolerance quiz by Charles Schwab, or you can use my AI prompt. You can also download it on my website. You need to know if you're an aggressive or moderate investor. If you're conservative, you probably will not be comfortable investing in individual stocks because they are volatile and there might be a lot of losses for you in the future if you cannot manage the risk. So you might be, when you see stocks in red, you will be selling them and you will be getting losses. If you're an aggressive investor, $100 more, $100 less, I'm fine with it. And that means that you're aggressive. You need to know that about you, and there is an actual quiz to help you understand if you can or cannot handle investing in stocks and investing with higher risk. When the neighbors tell me what to buy, it is a sure sign the market is at the top. I believe in buying great companies, especially ones undervalued or underappreciated. This quote is so relevant in today's AI bubble, right? Everybody's talking about AI, and it seems like everybody's investing in AI. Everyone tries to put AI on their website and sell that as their AI tool or whatever. There are a lot of companies that actually, yes, they do work on AI. And it's like NVDA, right? So everybody talks about NVDA, but if you look into its fundamentals, it's actually a great company. Revenue is up 60-something% last time I checked. The profit margin, I think, is over 40% again last time I checked. As for NVIDIA, yes, it is overpriced. I mean, come on, PE is what, 50 plus for NVIDIA? Probably gonna go down during the crisis, but at the same time, it won't go like bust, belly up, bankrupt, because there is substance behind, just the name of it, or just that it says AI company. But a lot of companies will actually go bust, because there is no substance, no healthy financials behind those big AI names. And the last quote, again, kind of along the same lines: the only buy signal I need is to find a company I like. In that case, it is never too soon nor too late to to buy shares. Recently, I analyzed Aritzia, right? This is the Canadian apparel brand, and I like their fundamentals, and I think I might be buying this stock. I might wait. I want to see how the tariffs thing, the tension, Canada and the US will impact the company, but overall, I like the company and I might be buying because the fundamentals look great and there is a growth potential. So if you also like the company, there is never basically too soon or too late to buy it. It's always a good buy. These are my favorite quotes from One Up on Wall Street. Read it. I do recommend to get it in paper, not Kindle or whatever, so that you can make some notes and go back to it whenever you need to analyze a stock. Let me know what was your favorite quote. Subscribe, share this video with a friend, and we'll see you next time. Don't wait. Start investing today. Bye-bye.